Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, on this wonderful Wednesday for another YouTube video. This is going to be your daily cryptocurrency market update. And for those of you that are new around here, we provide a non-BS daily market update every single day at 1 p.m. UK time, similar to this one, where we don't just look at the crypto space, but we look at other markets and correlations and try and piece the puzzle together to help us figure out where we think this small but exceptionally significant space is heading. And to the moon it is going. That, of course, is a joke. We don't really use that terminology on this channel. However, we do assess that there's been a fundamental change in the kind of macro environment that has led, and we've been very early on this call, to new all-time highs in certain stocks, the S&P doing very well, gold doing very well, and so on and so forth. Bitcoin will appreciate from that. And actually, we have technical structure that we've been covering day in, day out to suggest that we are looking for further upside for Bitcoin and the cryptocurrency space at large. It is, of course, stock season, and we do have earnings season, and we do have a lot more earnings coming out today. We're actually getting, believe it or not, a lot of better than expected earnings, certainly despite the headlines of this horrific macro environment that is going to be similar to 2008 and blah-de-blah-de-blah. We were very much in that camp in 2022. However, we pivoted. We've got some really interesting things to show you today. And actually, pivoted rightfully so. If you look at Microsoft, for example, that perfectly met our target. Of course, we are getting a bit of a sell-off. Snapchat and things like that we are bullish on. Also sold off. Do I have anything on AMC? This sort of whopping rally, you're seeing a lot of strength come in at what looks to be a stage one. If you want to learn about stage analysis, it's the way for you as a retailer to not get wrecked. Then please do consider joining the Patreon. We've started to roll those courses out. But you did have better than expected earnings. Now, this is the thing about the news and the fundamentals not massively affecting the price. Price is speculative at the end of the day, guys. Yes, there are fundamental elements to it, but potentially not in a fiat world that we live in where everything is multiple times earning. I've got a long-ass video for you guys where we're going to be talking about this, the Great Reset. And actually, crypto is it, guys. Fiat, which is debt-backed, will implode based on the debt not being able to be serviced, and a new system will be issued in, and it will be crypto. Is that the Stellar Lumens logo? I don't know. That's a joke, by the way. I don't think it is. But it looks similar. Back to what I was talking about fundamentals being BS. You perfectly hit this target. Isn't it interesting how we're having a pullback from it? This is a blueprint for what we think is to come for Bitcoin, what we think is to come for your smaller stocks that are like altcoins to Bitcoin. And ultimately, you had a good news in terms of Microsoft's earnings, and look at it selling off. It's because price is forward-looking. People price in these things and are privy to information before you are, the retailer, and that's why we trade the charts and not the fundamental narrative. Fundamental traders, just like economists, make the worst investors that there are. We will separate you from them on this channel. So we're going to get into all that. I want to really just quickly pivot. We're jumping around all over the place here, but I want to just start with this, okay? Now, this was from BlackRock, believe it or not. And it's very, very interesting. BlackRock, the optimal Bitcoin allocation is 84.9% of a portfolio. Now, this has been taken completely out of context. However, very interesting that they wrote this article. So the typical portfolio that we've had thus far is 60% equities, 40% bonds. Bonds have been in a 40-year bull market. That may or may not have ended. We'll see. Actually, bonds are causing lots of issues in the Silicon Valley Bank with interest rates and a number of other things. And then 60% equities, which largely, there's a correlation between bonds and risk. When bonds go up, risk typically goes up. We've seen a discorrelation with that recently, very interestingly. But this traditional portfolio allocation and the bond market is in the 300 probably trillion plus market, derivatives in 600 trillion market, is changing. And where's a lot of that money going to flow? Crypto. So this is important. We perform the following asset allocation exercise. Suppose we start with a 60-40 equity bond portfolio, assuming that equities and bonds return are log normal. So what they've been. Fitted to the moments reported in data in Exhibit 1, we compute the power utility risk aversion coefficient to yield that 60-40 allocation. In this case, a risk aversion of y equals 1.5 corresponds to 60-40. Then we hold the risk aversion fixed and estimate the optimal weight of Bitcoin, assuming that the equities and bond weights are held in the same pro rata. 60-40 allocation. This is the equity and bond weights set to be 1 equals HBTC, H bracket HEG, and 1 equal minus HBTC bracket HEG, respectively. A lot of sort of technical jargon here when it comes to portfolios, as there always is when you're talking about alpha, delta, whatever. We use the mixture of normal distribution, see equity 1 exhibit 3. For Bitcoin returns, that captures large positive skewness. Exhibit 4 presents the result, starting with a 60-40 equity bond portfolio, which is produced a risk of Y equals 1.5. The optimal allocation is a large 84.9%. Isn't it interesting how after this report was published, they then go and try and launch a Bitcoin ETF? The remainder of the portfolio is 15.1 is split 60-40 between equities and bonds. But they're saying you should hold more equity than bonds. Although Bitcoin has an extremely large volatility of 1.32, see Exhibit 1, the pronounced positive skewness leads to a large allocation of dominates in the utility function. The certain equivalence compensation required to not invest in Bitcoin is close to 200%. Wow, starting with a 2080 bond portfolio leads to a 12.5 Bitcoin allocation and a risk tolerance for investors with 80-20 bond portfolio desires leverage position in Bitcoin of 106%. So they're championing Bitcoin. This is an official Blackrock document. Very interesting how the world is moving towards ETFs, how actually we're seeing, and we said this was one bullish factor. We started off with Bank of America and Fidelity buying MicroStrategy, and then we looked at actually BlackRock have really took an interest in MicroStrategy, one of the largest holders, JP Morgan. Why are they buying MicroStrategy? It's not because they think Michael Saylor's a genius. It's for the regulated Bitcoin exposure. And that is it. Same with Fidelity or Vanguard. I can't remember who it was, buying a 10% stake in Riot, one of the largest miners out there. Guys, the bull run is here. Forget the news. Okay, we've just shown you a perfect example of where news doesn't match up with the charts. Charts told you what the news couldn't. And that's why you've seen MicroStrategy, which was used as Microsoft, which was used as our poster child, sell off on good news, better than expected earnings. You hit your target, you take off here, and you rock and roll. This is where this channel is separate from the rest. I was going to use the word holy then, but I'm not going to. So we stick to the plan. You're just doing what Bitcoin does and what a normal chart looks like. The people that are actually like calling for 10K and plus based on this are lost, I believe. We stick with our conviction until we get something wrong. Then we hold our hands up and we say, okay, we're wrong. We've been very right. This year anyway, we've got lots of things wrong. We were right last year. We were very actually late on calling the end of the bull market. That's a big mistake of mine that I'm determined not to make. Again, but you're doing a very similar thing to what you've done previously here. This is typically when you get out of a range, when you're at that hurdle, you want to take a few steps back, get a running jump, and clear that sucker. I was about to say something else there. It's been a pretty long week for me already, guys. Lots and lots of things going on. Yeah, so this is very interesting. I'm going to do a completely encapsulating video on the bond market because this is a reality, right? Yeah, it's not 2018, but it's coming. And this image here of a phoenix, a new monetary system, a one world currency maybe, which has been wrote about by many of our sort of forefathers with a warning attached to it. It gets birthed out of a debt and fiat currency destruction that's caused by the bond market imploding, the US bond market specifically, and everyone is levied to the hilt with US bonds. Except for China, that still do have them, but they've been moving more and more away from them. Henry Kissinger, who was a 100-year-old man that needs medical support just to go anywhere, made the trip over there to talk to Xi. We've got so much for you. You know, one thing I care more really about anything is making sure that retail have a lifeboat. And I actually do think that Bitcoin and crypto is it. I'm not a Bitcoin maxi, but I appreciate Bitcoin and I love it for what it is and the questions that it's brought to the world. The very definition of value is now up for grabs. Money is an ideology. It was the father of modern economics, Adam Smith, that said that. You know, and actually we looked at that clip from Yovel talking about actually it's just a story. The best storyteller wins. I hate to agree with Yovel from the World Economic Forum. I think the World Economic Forum, I don't agree with what they do. I don't like the policies that they're trying to further. We try and stay apolitical on this channel, but certain things I'm passionate about. and freedom is one of them. This is he was very right in regards to saying that Bitcoin and crypto and fiat and money really is just a story. So we've got another bank that's failing. This is PacWest. I think they're already in trouble. I think we've already seen a sell-off for PacWest. Let's check that out, actually, because the problem with Twitter is you get a lot of regurgitated nonsense come up consistently. Yeah, so this is an old story. But of course, we've seen better than expected bank earnings. Let's take a look at this. Yeah, I wouldn't touch that at all. Don't buy anything under this 30 MA, guys. Justin, Bank of England has estimated that it will require the UK Treasury to transfer a total of $150 billion by 2033 to cover expected losses on its bond buying quantitative easing program. Oh my goodness. And then you've got the Fed and the other banks continuing to up rates. We also need to do a video on inflation. People are taking their eye off inflation. The battle is won, and it has been for the time being, right? And we've seen the markets correspond with that. But with them now buying bonds, we are now I'm seeing in the charts worrying things that may be potential bottoming structures for natural gas, potentially maybe oil, not so much oil, but things like wheat, copper, a number of other things, which need to be addressed because this is what moves the markets. Subscribe to the channel, guys. Again, interesting stock earnings coming out. Some good, some bad. Stock market's had a great run. It would be almost expected for it to have a bit of a pullback, perhaps. But Bitcoin may accelerate during that time period. And we've got these kind of discorrelated periods. The futures market for stocks is down. Gold's having a great run. We're bullish as hell on gold. I think 3K is coming. You're going to get a 50% move probably on gold in a couple of years, I reckon. Again, where's this bounce on that bull flag structure? Very interesting. Dollar. And we did surmise this, and then we saw loads of other people tweeting about this. Right? You're at your resistance. Isn't this textbook? Just like us calling for that final stab to the downside for Bitcoin, like we've had previously, and then everyone gets bullish because it's broken what retail would know as support. And of course, you short support. You don't short support, but you short the break of support, and vice versa. This is how they get. Technical analysis works, but there's nuances to it, unfortunately, in this game. That's my message on it, and you need to adapt. And again, what's the dollar done? It's rallied, it's broken this resistance, significant resistance. In regards to resistance, quick little bit of jargon. What is more bullish? Or sorry, what's more bearish? Typically in a head and shoulder structure. What chart's going to give you the bigger move? And there's been studies done on this, which I find interesting. Typically, the flatter the resistance, the bigger the move to the downside. Typically, the more steep, the less of a move to the downside that you get. And you can see that actually play out on a number of charts. So this could be some big resistance that you ultimately see downside. So there's a lot going on. Of course, the Fed are set to up rates today. So given they're going to do a 25 basis points, it is what it is. They paused on the last one. It doesn't really make much sense what the Fed's doing to me, but I'm not a Federal Reserve. I don't think it's ever made much sense to anyone what they do. But essentially, there's now even a 1% probability. Is it out of the realms of possibility they do a 50 just to really sort of, give that kick? I'm not sure. But I think 25 could be on the table, and certainly they hinted maybe at another one. It is on the table. It's nearly a not 100% probability. I don't think the markets largely care too much about this, if I'm being honest. Certainly the dollar's led the way on that, and we'll see what happens on the hike. And certainly we're all going to be listening with attentive ears to what Jerome Powell has to say as crypto investors. It sucks that it is like that, but it is like that. We dance to the macro beat. So we remain bullish, we remain long and strong from an investment point of view, from a leverage point of view. I think there's times where you trade and there's times where you don't. This is probably one of those times where, unless you see a setup, you don't bother trading, certainly on leverage. But investment, we're long and strong. You want to find out what I'm buying, where I'm buying, please do consider joining the Patreon. On that note, I'm going to love and leave you. Have a wonderful Wednesday, guys. I'll see you all in the next YouTube video.